Good afternoon, everyone, and thanks for attending. It's pleasing to see such a large number of our shareholders here. Over the past decade since demutualisation, NZX has gone through two distinct phases of growth. The first part of that decade was all about commercialising what was a mutual. In conjunction with some strong capital markets activity, making sure that we were pricing appropriately for the services we provided both to market participants and others. The second part of that decade was all about inorganic growth across the non-capital markets businesses. We acquired Countrywide Publications, which published as Farmers Weekly. We acquired a number of other agricultural information businesses. We acquired MCO, which is now NZX Energy, and we acquired a couple of businesses in Australia, including the Clear Grain Exchange. Our view is that we are now entering the third phase of growth, and a lot of what we have been doing over the past year is building the foundation for that growth going forward. As Andrew mentioned, KiwiSaver is underpinning significant growth in the New Zealand capital markets. So through the cycle, we expect that to continue for some time to come. Our focus this year has been on two things. One is growing the listings pipeline, which Andrew mentioned, through the appointment of Aaron Jenkins to head our markets team in Auckland, and a much more disciplined process around how we manage potential IPO candidates, from those who are 3 months away from IPO to those that may be 3 or 5 years away. The second initiative in that business that I wanted to comment on is the launch of the growth market, which we expect will happen towards the middle of this year. It's an important initiative for us because it's in line with the government's objective of providing capital to small and mid-sized, rapidly growing businesses. It's also unique. For issuers, it will provide a lower cost path to listing. In particular, we are eliminating the need for forecast financial information, which would significantly reduce the initial listing costs. And secondly, we have a simpler rule set in place, or proposed rule set in place for that market, which will reduce ongoing compliance costs. There's been quite a lot of talk about what the impact a different disclosure regime would have for investors in that market. Our view is that actually those companies that list on this market will provide more information in a more timely fashion to investors than small companies that are listed on either the AX or the main board today. Why do we think this? Firstly, we're going to mandate quarterly updates. Secondly, we're going to provide research coverage on all of those companies. And finally, we're going to have a disclosure environment which will encourage companies to provide information to investors on a timely basis, including forward-looking financial information and key operating metrics, which most small companies don't provide today. And in terms of the market structure, we're also introducing for the market, not just individual securities, a market maker to provide liquidity to the market, and of course the benefit to issuers for that. This is a much fairer valuation for their company. Turning now to our soft commodities business, and this business comprises two components. One is our dairy derivatives market, and the second, the Clear Grain Exchange in Melbourne. CFTSC approval was received in January this year, which enables US participants in our dairy futures market to connect directly with us. It lowers the costs for the participants from the US who are already in that market, but also a number of potential participants did not want to trade through an offshore participant to come into NZX. We've already made a couple of marketing trips to the US and are confident that we'll get more trader participation, but also more participation from clearing and trading participants in that marketplace. As Andrew mentioned, we've refocused the efforts of the Clear Grain Exchange in Melbourne. We made some changes to the management team there at the end of last year, and we're confident that we'll be able to launch 2 new products for this harvest, which will start in October this year. The first one is forward contracts. We currently only trade in the spot market there, but also expansion geographically beyond the East Coast, where we have a close relationship with GrainCorp, to South and Western Australia. As you were noted in our quarterly metrics, Revenues in our agricultural information business have increased sharply this year. That's largely due to an increase in advertising on the back of a drought last year which significantly reduced confidence in the agricultural sector. That confidence has come back and so therefore have advertising dollars into the newspaper. Of course, as Andrew mentioned, the biggest challenge for that business is shifting from a print model to an online model. And we're making some good efforts there. We're getting around 100,000 page views per month for our Agri HQ sites, and we're expanding the range of content beyond the high quality journalism that we already have in our print publications. Two examples of this are the launch of the Shearing Shed, which is an online forum, and the most popular section of that is in fact crashes and paddocks, if you want to have a look. But we're also launched more seriously an Agri Academy, which is a range of online learning modules for people in the rural and agricultural communities. Part of that business is also agricultural data. And again, we have a range of initiatives there to expand the offering this year. We launched a FarmGate product for the dairy sector in April, and we're going to launch a range of analytic tools and predictors for dairy farmers in July or August this year, based on work that we've jointly conducted with Massey University. In general, in New Zealand, despite the importance to our economy, the agricultural sector doesn't have a lot of good data available or analytic tools in order for farmers and other participants in the sector to understand what's happening to prices and volumes. We see this as an area of good opportunity for us both to provide that information and data, but also to develop risk management tools on the back of that. So we're continuing to look, as we've said before, for smaller fill-in acquisitions here, and we're looking to expand the team in order to increase the size or range of our offering in agricultural data. As Andrew noted, in our funds management business, we're going to launch 2 new funds this year. Passive funds management is much more popular or larger part of the market offshore than it is in New Zealand. There are some good historical reasons for that, but we also see a good opportunity for us to grow the passive funds management sector in New Zealand, both through NZX's participation, but also providing some opportunities for others in that market. It's a good example of where we participate in the capital markets value chain. By launching those products, we expect to see second and third order effects. The first one, of course, is we'll see an increase in trading activity through the ETFs, but also we have a pool of stock available for securities borrowing and lending, which will enable us to provide more liquidity for institutional fund managers. Another example of a product launch this year, which also has those similar second and third order effects, is the launch of equity futures and options, futures being launched on June 16th. In addition to launching new products in the fund management sector, we've also spent some considerable amount of time thinking about how we could participate in the funds management value chain through registry and other services, both ourselves and through our 50% owned subsidiary, Link Market Services. It's also an area, the administration of funds, which will grow rapidly with the growth in KiwiSaver, and there's a lack of technology investment in that area in particular in New Zealand at the moment. Our market operations business, which is the 5th of our 5 businesses, doesn't have quite the revenue growth potential of the others. By their nature, the contracts we have with Fonterra and the Electricity Authority to run parts of the electricity market are fixed price contracts. We do, however, undertake development work on behalf of the Electricity Authority, and this year we're working on 2 large projects, Security Prudential Supervision, which is related to the settlement of electricity contracts, and secondly, the expansion of financial transmission rights, which will generate some good consulting revenues in that business towards the second half of this year. By delivering on those contracts and some other initiatives within our energy team, we expect that we'll be able to demonstrate the efficiency and effectiveness of our services to the sector in running those contracts. Despite the fact that they're up for renewal in 2016, we're confident by doing that we'll be able to renew those contracts. As I mentioned at the beginning, over the last year or so, we've built quite a strong foundation in order to pursue these opportunities. One of those set of activities has been focused on technology. we introduced a new trading system at the end of 2012, and we upgraded some non-core parts of our technology last year. And the benefit of that has been seen through some very large IPOs, some index rebalancing, and some very large sell downs last year, where our technology performed flawlessly, something that we doubt would have happened without our new trading system. We're also looking at upgrading our clearing infrastructure, and provided it meets our business case criteria, we will undertake that in 2015. We've also increased our Auckland presence, and as Andrew said, it's the first AGM we've had here in some time. We've got around close to 20 people in the office here now, largely people who interact on a daily basis with participants in the market or our issuers. Another thing that we have done this year, and you'll notice, I hope, when we have drinks after the meeting, we've put in place what we call a ticker, but is best described as a display board for stock prices on Zurich House, which is our offices located in Auckland. As someone said, it's about 2 generations ahead of what we have in Wellington. But the objective there is obviously just to increase the profile of the markets for the general public. And finally, we've made some significant changes to the management team. Of the broader management team at NZX, it's about 20 or 30 people. Half of that team are new or in new roles over the past 18 months. We're working together well, and I'd like to thank the management team for their efforts and contribution last year. I'd also like to thank your board for their support and guidance to us over the last year, and to you, our shareholders, for continuing to support us as we build this foundation for future growth. Thank you.